Hi everyone. Hello. Good evening. Good evening everybody. I hope I am audible and visible clearly. Am I visible and audible clearly to everybody so that we can start the class? Hi everybody. Okay guys, so let's start with the class and I hope the first slide, that is the depreciation concept and accounting, it is visible to you. Okay, great. All right. Okay, so depreciation, it's a very old concept, and I'm sure all of you are very well versed with it. You exactly know what is the meaning of the useful life of an asset, what is the meaning of residual value, the cost of the asset, what is the concept of historical cost, everything, right? So, this is the mind map, and let me remind you, you are free to download this mind map and also, one more thing before we proceed, we have a rapid fire round for you. Today, we are going to be doing 2 chapters, and we have roughly 5 to 6 questions on each of the chapter we will be covering today. And you can download the PPT. And also, let me tell you that we have the rapid fire round where the questions are basically objective type. But in your exams of CA Foundation, you will not be getting questions which will be objective type. The paper is going to be completely subjective in nature. Okay, so please do not get confused. Do not worry and do not think that objective type of questions are going to be there. This is just for your revision purpose, and this is it. Let's get started. The concept of depreciation, then what is how do you change the method of depreciation, what is the estimated useful life of an asset, and most importantly, what are the different methods by which depreciation can be calculated. Okay, so these are the various methods that we have for you over here: straight line method, diminishing balance method, depletion method, production units method, sum of years of digits method, okay, then annuity method, sinking fund method, and the machine hour method. I can see a lot of you are writing something right now on the chat window. Uh, let's focus on the class right now, okay, so that we can finish everything in time. If there is anything genuine that I will see coming up as a question to me, I will take it up. Else, anything that is irrelevant, I don't think, I'm sorry, I'm not going to be taking it up. Okay, all right, so this was it. Residual value, depreciable amount, everything. Okay, you are very well aware of all these concepts. Yes, I see somebody writing me. Please reply. Please reply. Please tell me a question. Please tell me a question. If it will be relevant, I will definitely take it up. And before we don't want to lose out on any time, so I'm taking you to the rapid fire round. And question number 1. This is in front of you. I hope this class is going to last for half an hour. Okay, it finishes at 6 p.m. So question number 1 is visible to everybody. Is the slide available? Okay. Uh, I'm going to be doing this question. Okay. Yeah, so everybody is aware of the answer to this question. Depreciation account is dash in nature, real, personal, or nominal, or none of these. So it has to be one of these. None of these cannot be the answer. So the answer is nominal account, because it is always debited to the profit and loss account, and it is a recurring nature item, and it's a non-cash expense which is taken to the P&L account, and it is definitely nominal in nature. Okay. Right. So question number 2. I hope I get the right answer for this one. Which of the following methods is also known as rule of 78? Option A, annuity method. B, straight line method. C, written down value method. Or D, sum of the years digit method. Can I get some right answers here? Okay. Yes, I'm getting a lot of right answers. The actual answer is sum of the years digit method. That is also called the rule of 78, and particularly when it is calculated on a monthly basis. Okay, remember this. The correct answer is D. Okay, I'm taking you to the next question. Yeah. Question number 3. Ascertain the fixed amount of monthly depreciation for a computer purchase for rupees 25,000 with an estimated residual value of 5,000 and service life of 4 years. Yeah, so I think Shubham just gave me the right answer. It is 417. That's absolutely correct. How did you calculate it? D is not the right answer. Guys, please focus here. The reason is that they've asked you for the monthly depreciation. Okay? And if it will be annual, then 5,000 is the right answer. But no, it cannot be D in this case because we are asking you the monthly depreciation. As I've always asked you, that you need to be very much focused on what exactly is asked on the question. So if they are expecting you to answer for monthly depreciation, 417 will be the right answer because 25,000 minus 5,000, okay, that is 20,000, will be divided by 4, which is the service life of the asset. Okay, and after dividing it by 4 you get an answer as 5,000, and then you divide it further by 12, and then you get 417 after rounding off. Okay, yeah, 5,000 divided by 12, absolutely correct. So the correct answer is not 5,000, it is going to be 417 because they've asked you for monthly depreciation. So be very careful of what is expected of you to answer in the question. If they ask you for annual depreciation, 5,000 will be the right answer. Okay, I'm taking you to the next question. Gotcha. All right. Under straight line method, depreciation is charged on A, market value, B, cost less scrap value, C, cost of acquisition, or D, cost plus salvage value. Let's see who gives me the right answer. Uh, Okay, Suvri Prasad is the first one, I guess, to answer the correct one. Yes, and then I see a lot of you answering the right answer. The correct answer over here is cost less scrap value. Okay, and cost is, of course, the cost of acquisition, and you always subtract the scrap value because the purpose behind calculating depreciation is to actually distribute the cost over the useful life of the asset. And since scrap value is something that you realize in the end, and that is why it is not really considered to be eligible to be a part of the cost, and that is why we subtract the scrap value from cost. Okay, this is the right answer. Shubham, is this clear? Is this clear to everybody? Because scrap value is something you realize at the end of the service life of the asset, and that is why you subtract it from the cost while calculating the depreciation. I'm taking you to the next question. Okay, great. Question number 5. I want to see how many of you give me the right answer to this one. What is depreciation and how is it different from amortization? Give me the right answer here. What is depreciation? There are 4 to 5 things that you need to mention on this answer. Can somebody tell me all the valid points? Yes, Dipali is right. Depreciation is always calculated on the tangible items, and it is a charge that is put on the tangible fixed assets and over the useful life of the asset, and it is debited to the P&L account every year. And amortization always takes place on the intangible items. Yes, intangible items like patents, copyright, goodwill, all of that. Okay? Yes, right. I see a lot of you giving me the right answer here. Good. And this is the last question that we have for you for the chapter number 1. I mean, chapter number 5, and the first chapter that we're doing today. Okay. I don't know why they've used this name. Mr. A purchased a machine costing 10 lakhs with an expected life of 10 years. Uh, the salvage value of the machine is 1 lakh. Using the straight line method, ascertain the rate of depreciation. Now, be very careful. They've not asked you for the annual depreciation. They've asked you for the rate of depreciation. Again, do not give me the amount as the answer. You have to give me the percentage as the answer. 10%. Absolutely correct. Absolutely correct. Um, First, what you'll do is 10 lakh is the cost, right? And salvage value is 1 lakh. So you'd subtract 1 lakh from 10 lakhs, and that will be 9 lakhs. And 9 lakh will be divided by 10, which is 90,000, which will be the annual depreciation. Okay. And after divide, and once you get the annual depreciation, that is 90,000, you will further divide 90,000 by 9 lakh and multiply it by 100, and you will get the rate to be 10%. No, the rate is 10% in this case. Okay. You will divide 90,000 by 9 lakh and not 10 lakh. Okay. Are we clear on this? I hope nobody is giving 9% as the answer. 9% is not the right answer here. Okay? Alright. So now I'm taking you to the next chapter, and then we will do the rapid fire round for the next part of the session. Okay. Accounting for special transactions. So this is a pretty colorful mind map that we have for you. Please download the mind map. And I don't know what happened to the screen. Just give me a second. My screen has turned blue all of a sudden. Just give me a second. Okay, it's back to normal. Okay, so accounting for special transactions, you have certain types of items here. You have the bills of exchange and the promissory notes, and then you have sale of goods on approval, also called return basis. Then joint ventures, royalty accounts, account current, average due date, and consignment. And mostly all of this is also covered with you in class 12. So you must have done them, and I'm sure you must be remembering the concepts also. Average due date is very important. Joint venture is also important. Sale on approval basis is also one of the favorites, and you can be asked something there. Bills of exchange is a very simple chapter. You barely have anything to do there, but again, it's an important chapter. So be careful when you enter your exam hall. You must be aware of these concepts, and you should know how to calculate the royalty, the various treatments covered under royalty accounts, under the books of lessor and lessee, all of that. Okay. And take a little look of the mind map and see if everything is clear to you. Please download the mind map for your help. Yes, bills of exchange is a very simple chapter, but I see a lot of students getting confused with this chapter. So be sure of everything before you actually sit for your exam. Okay. So I'm taking you to question number 1 for this section. Question number 1, which of the following statements is true? First, a joint venture deed is to be drafted before forming joint venture. B, the profits of joint ventures are shared by the co-venturers in agreed ratio. C, joint venture does not follow accrual basis of accounting. Or D, all of the above. B. Yeah, I'm getting the right answer from a lot of you. I'll give you a little reason for why A and C are not the right answers. The correct answer over here is B, and it is not D, not D. I'll tell you why. In case of joint venture, there is no explicit need to have a joint venture deed like in the case of partnership. Okay, so you don't really need a deed to get into a joint venture. Okay, then coming to point number C, joint ventures always they follow the accrual basis. Over here it is written does not follow, so that is why C is not correct, A is also not correct, and of course all of the above is not the correct option. So B is the right answer over here. Okay, I hope it's clear to everybody. Okay, question number two. Which of the following expenditure are not added at the time of valuation of closing stock? Yeah, partially right. Give me the right answer to this one. It's a confusing one, and let me see who gives me the right answer here. You have to apply the logic which of these items is recurring and which of them is not recurring. So, uh, I'm getting variety of answers here. Yes, insurance is actually the right answer in this case. Insurance is something that is of recurring nature. It accrues to the business every year. It's an annual expense. And that is why, while you are valuing the closing stock, insurance does not become a part of the cost. Okay? But rest of these items, the expenses which are incurred by the consigner and the non-recurring expenses of the consignee, all of them, they are added to the valuation of the closing stock. Okay, so insurance charges is the right answer because it is of recurring nature. Is it clear to everybody? Can we move on? Custom duty is also a one-time expense, so that is also added to the closing stock. Yeah, Shubham gave the right answer. I took your name, Shubham. Okay, so let's move on to the next question. You guys are doing well, very good. No, insurance is not supposed to be added because insurance is a recurring item. Okay? All right, very good. Well done. Question number three, accommodation bills are dash in case of dishonor. Now, this is a tricky one. Let me see who gives me the right answer and the first right answer. A, legally enforceable. B, noted with notary public. C, not legally enforceable. D, none of the above. I'm still waiting for the right answer. What should be the right answer here? C, C is the right answer in this case. Accommodation bills are not legally enforceable in case of dishonor. And the reason is because accommodation bills actually the drawee of the bill is not a party in the business. Okay. So in that case, accommodation bills they do not get legally enforceable. Okay. A is not the right answer here. They are not legally enforceable. Okay. There is no consideration in case of accommodation bills. Remember this. No consideration, and that is why they do not become legally enforceable. Okay? Will you remember the reason? No consideration? Okay. All right. Let's move on to the next one. Question number four. In the books of leisure, royalties are dash. Point number A, an income. B, an expense. C, transferred to profit and loss account. Or D, both A and C. Yes, Krishna, that's absolutely correct. No consideration, no contract, and hence not legally enforceable. You've done it under law, right? in the Contracts Act? Uh, D is the right answer here. I'll take it for you. Why is D the right answer? Because in the books of leisure, royalties are always incomes. Right? Royalties are incomes, and of course, they are credited to the profit and loss account. Hence, the correct answer is D, that is both A and C. Okay? A is not the right answer here. C is the right, sorry, D is the right answer. A and C together. Okay? I'm taking you to the next question. We have two more questions, and I think we are going to be left with some time today. Okay, it's a long question. It's a subjective type, and let me remind you, your paper is not going to be objective type questions. All the questions are going to be subjective in nature. Question number 5. Okay, no problem. Question number 5. Subhadra sent goods invoiced at rupees 1,05,000 to Krishna on sale or return basis. The whole lot of goods was accepted by Krishna. Sorry, the name got changed. It should be Krishna for rupees 1,10,000. How will it be treated in the books if the goods are sent on sale or return basis? Casually explain. What should be the correct journal entry? Can somebody give me the correct journal entry in this case? I'm waiting for the right answer. Yes, the goods will be recorded, but no, give me the correct journal entry here, please. Yes, I think no, but customer should be debited. Slight mistake in your answer. Yes, I see somebody giving me the right answer. The debtor should be debited. Krishna will be debited with 5,000 and sales account will get credited by 5,000. Okay. So the correct journal entry is going to be Krishna account debit 5,000 to sales account credit. I mean, sales account is getting credited by 5,000. Okay. That is the right journal entry. And why is it so? See, when the goods are accepted at a higher price than the invoice price, okay, which was 1,05,000 in this case, and goods were accepted on 1,10,000, then the sales account is credited and the debtors account gets debited with the difference in the price, which is 1,10,000 minus 1,05,000, that is 5,000. Okay. Okay. So can we move on? No. I hope it is clear to everybody. Okay. And okay, sorry, it took me a little while to change the slide. Okay, so the next question is, what is royalty? Give examples. So I am pretty sure everyone knows the right answer to this one. What is royalty? And you have to give the example also. So what is royalty? Still waiting for the right answer. Okay, owner of the particular thing. Absolutely correct. Absolutely correct. Right examples, very good. Royalty, it means the periodic payments which are made by the lessee to the lessor, okay, for the use of the right vested in the lessor. Okay, this is absolutely the correct definition of royalty. And you can give various examples here. You can give the example of author of a book for the printing of his copies of the book. Then You may also mention the patent, okay, the patentee. Then for the use of the technical know-how and the copyright, all of that can be given as valid examples of this case. Okay, so I guess this was the last question that we had for you, and we are still left with 4 minutes. Is there anything you want to discuss? I am done with the questions. I will quickly tick the last question also. I don't know why I ticked it. Okay, it was not a question with options as anyway. Okay, so we're done with the mind maps. We've also discussed the questions, and yes, mine taken on lease. That's also a valid. Okay, somebody's asking me the study plan for foundation. See, we have just 2 to 3 minutes, and there will be a couple of things that I would mention to you. Although I repeat the things that I tell you in every session, but it's still important because some of you will be new here. Okay, so the thing is that first of all, you need to revise the entire course at least 4 to 5 times before you sit for your exam. Please just do not depend upon one single or two revisions. It requires 4 to 5 proper revisions before you sit for your exam. And because remember, it's a competition that you're going to face, and probably the first competition of your life, right? Till now, you were in. I mean, you've just finished your class 12th, I'm assuming, and till now you haven't really sat for a competitive level of exam. So um, just be careful about that, and with your revisions. And apart from that, what else can you take care of? Try and save some time in the end of the paper so that you can go through the paper once before you submit your copies. So you've got to be really good with time management. I'm telling you, this is a personal tip that I'm giving you. People who really clear the exam, CA Foundation, and all the further exams that you're going to be appearing for in CA, these are the people who are generally good with the time management skills. Okay, so you've got to be very good with your time management. And I see there is only 1 minute left with me, so I don't really have time. Next class is going to be on Saturday, and I will be taking up law with you. And after law, we will have a class on Sunday for accounts. And the same time, I will see you again. Okay, and you're most welcome for everything. And you were great audience and great students. I see so many of you answered the right answers. So see you again next time. Okay, all the best, do well, and fly. Just come out successful. Okay, all the best, guys. Take care. Bye bye. I'm sure all of you are going to clear your exam. All the best. All the best. Bye, guys. And I'm stopping the broadcast now. I'll see you next time. Okay?